Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The government has beefed up security measures in Jammu and Kashmir under Section 144 of the CRPC. Movement of citizens have been restricted. Many leaders detained or arrested. Internet services suspended and educational institutions shut till further orders. Mumbai continues to remain on alert after the incessant rainfall over the weekend. The BMC's declared a holiday for all schools and colleges. Finance Minister Nirmala Sitharaman will meet the heads of all PSU banks later today. This will be her first such meeting after taking office. Spandana Spurti Financial Services looks to raise 1,200 crores through an IPO that opens for subscription today. More importantly, the world markets are not looking all that pleasant. The Chinese yuan plunged beyond 7 per dollar mark for the first time in more than a decade. This after the central bank sets daily currency fixing levels weaker than 6.9 for the first time this year. This is seen as a reaction to Donald Trump's decision to impose 10% tariffs on a further $300 billion worth in Chinese imports, as also some other reasons. And as a result of this, trade tensions have risen. The PBOC may see no need to keep the yuan stable in the near term. To talk about the implications of the same, we are joined by Michael Every, Head of Financial Markets Research at Rabobank. Michael, good morning. Thanks so much for taking the time out and speaking to us at Bloomberg Quint. What's your thought process behind why China has done this? Of course, one, it's a reaction to the tariffs and other reasons, and the implications that such a thing can have on financial markets.
Well, clearly this is Chinese retaliation for what the US did on Friday. It's just been delayed. I would imagine it's probably also mixed up in China's reaction to what is happening in Hong Kong, which I believe we'll be discussing in a moment, or we should be. And may I just add that retaliation has already gone a step further. We've just seen breaking news that apparently China is going to cease all imports of agri-products from the US, all agri-products. Cease buying. Now, if that does happen, of course, you can imagine that when Donald Trump wakes up and goes on Twitter in a few hours' time, it's going to get even worse. From the US perspective, I would imagine the tariffs may be threatened to 25% rather than 10%. And then the currency is going to go into an even further downward spiral. Because if there's one thing we can say, and that is that the PBOC near term, and I stress near term, has been in a position to maintain the stability of both the onshore and offshore renminbi. The fact that it's allowed renminbi to go through 7 and offshore to get to 7.11 is an incredibly worrying signal that, frankly, all bets are off and all gloves are off at the moment.
That was my reaction, Michael, because this thus far hasn't happened. This was being seen as a sacrosanct level. Now, I take on board the point that you're making, because the news that are coming in right now is that the China is set to ask buyers to halt US agri imports. And I like the point that you made. What will happen when Donald Trump wakes up and takes to Twitter? My question is, how do you think the equity markets react to this piece of news? Is this a short-term gyration which can be arrested by a move or two, or do you reckon this is a line crossed which will have severe implications for financial markets over the course of the next few days or weeks?
I think it's far more likely to be a line crossed, because while things can be walked back and deals can be done, I'm not saying anything is permanent. At the moment, this is step by step how you go towards the kind of worst case scenarios that I've been talking about with my clients for years, where I've said it will be political when the renminbi eventually weakens past 7. And once it does, there's no stopping it, quite frankly, because once you cross that line in the sand and the US retaliates, basically it's a downward spiral, as I've already said. I don't see how equity markets can logically react positively to this. On the other hand, I think now's the time to dive into government bonds and buy with both hands, because there's only one way that interest rates are going in this current environment, and it's down.
Yeah, I mean, the US yields might actually go down to whatever 0.65 levels as well in the near term. Michael, and therefore, just to make this clearer for our viewers, Michael, do you reckon, I'm not talking about going long, but do you reckon this has the potential to create a 2, 3, 5% dislodgement in equity market values in the very short term?
Absolutely. I mean, I want to stress, I'm not an equity strategist. I wouldn't want to misrepresent myself as that. I'm on the rates and FX side. But I can certainly see that kind of downward move in equities would be possible. The only kind of positive news I can throw out there is, I think, of all the major equity markets that I look at globally, or that I see globally, India actually is relatively well placed, because you're not actually that close to this trade war at all.
Well, we're taking hope from that. Add to that the fact that crude is weakened as well. All of that probably helps Indian markets. But for now, the oil markets seem to be in turmoil. And Michael Every, understand you have to go to a meeting, so won't hold you for too long. But thank you so much for taking the time out and speaking to us this early in the morning. Well, that's the view from Rabobank, Michael Every. It is something that he spoke about the last time as well, that there are some punches that are being dealt which might not be taken back. And while the US did what it did, this is China's response. One, on the currency front. Two, of course, the news that came out that China is said to have asked all state-run importers to halt US agri imports. And God knows what happens when when Donald Trump then takes a reaction. But this is the big thing. The yuan sub 7 for the first time in a number of years, actually. Offshore yuan for the first time in its history, because it started trading from 2010 or thereabouts. So this has got big implications in all probability for world markets. How much does India react to it is another question altogether. By the way, I mean, one, there is no way that the Indian markets will do well, because if you look at in a scenario when the Asian markets are dropping, so when you look at the Asian screen right now, Nikkei in particular down about a couple of percentage points. At some point of time, we'll have the other markets. Hang Seng is down about 2 percentage points as well, and the SGX Nifty, which had shown that small bounce in Friday's trade, the Nifty, that is, the SGX Nifty is indicating will start off in the red again. So all those gains will get negated. The question is, after that 1,000-point fall, can we fall more? Well, frankly, if you look at what the FIs have been doing all through the last few days, you'll probably believe that yes, it is entirely possible. I mean, the FI flows are just looking very, very wobbly. But the one in the yellow bars are the FI flows, and they have only worsened. Even on Friday's session, when the markets looked okay, there's a large sell number from the foreign institutional investors. And in a week alone, we've sold out almost $1 billion. I mean, we're talking about $2.5 billion in the whole month of July. The last week alone has seen 6,569 odd crores being sold out. So that tells you volumes about how FIs are viewing possibly all world markets and definitely Indian markets for sure. So we'll start off lower. The question is only that can there be some respite for specific pockets, because maybe of the crude price fall, or maybe because of the numbers. Difficult to say, but there are a few stocks in news that you should also monitor in the session today. So firstly, one set of numbers, I mean, aside of ITC and a few other larger ones that came out with numbers, the one set of numbers that I thought stood out, and we'll talk about it a bit later on, Deepak Nitrite. So these are amongst the stocks to watch. This one, revenues up 2.3 times, net profit up 7x, margins improve to 24.2% versus 11.4%. Numbers not comparable, but strong performance led by performance products segment, which led growth. In all probability, positive news, and in all probability the stock might react. So let's wait and watch. There were some other good results, by the way, that stood out. So Gujarat State Petronet, Equitas and AB Capital, as well as V-Mart Retail, JK Cement and Relaxo Footwear. So while the markets is very weak, these companies came out with good numbers, might help you to go out and try and figure out what the near-term, medium-term implications of these strong results could be. NIIT is going to consider a share buyback on August 10th, so that is an important one to monitor as well. Bloomberg reports that Blackstone and Carlyle Group are amongst the 5 investors that are in talks to acquire a stake in Shriram Capital. That puts Shriram Transport Finance and City Union Finance firmly in focus. So watch out for Shriram Transport Finance for sure. And lastly, the big boy Reliance Industries has been downgraded by Credit Suisse to underperform from neutral. The target price has been cut to $9.95 from $13.50. They believe the cautious view on the refining and the petrochemical cycle, and the fact that Reliance is likely to be free cash flow negative for FY20 and 21 makes them take this point. They also see slower enterprise rollout and weak Geo ARPUs in the first quarter in FY20, which will lead to further weakness for the stock. So 1184, Reliance has been the big underperformer in this last 1,000-point fall. Can it reverse that, or will it succumb to further selling pressure because brokerages are now taking a negative view, is the other big question. So watch out for all of this. Let's tell you what's lined up on First Word today. The collection of the top editorial stories that we should monitor. First, Agam takes us to ITC's first quarter numbers, which came out after market hours on Friday. Darshan does a status check of the earnings season thus far, now that more than half of the Nifty companies have come out with the numbers. We turn our focus away from Nifty companies and talk about Deepak Nitrite with Yash, which delivered a stellar quarter. And I take you to the latest from Jammu and Kashmir. ITC reported a profit growth of over 12% in line with analyst estimates, but segmental margins were under pressure. Agam Vakil is standing by with the key highlights of the quarter gone by and what can one make out of ITC's numbers, if there are any trends, if there is anything that ITC did which the other companies did not. Morning, Agam.
Good morning, Neeraj. Well, we all know that ITC's core business is cigarettes, and that's been subdued. It's been below expectations. So let me start off by talking about the headline numbers for ITC and how it's done. So on the top line, we have seen about a 5.8% growth, and that is, well, a tad lower than what we were working with, coming at around 11,500 crores. Expectations were 11,700 crores, and I'll come to the reason why those revenues are slightly lower. But moving on to your EBITDA, that's risen around 9%. Your EBITDA margins, of course, consequently have also expanded to around 39.7% against 38.6%. And of course, profits, that's the reason why we're seeing a rise of around 13%. So in line with expectations there. Let's talk about your cigarettes. Now, the cigarette volume growth coming in and estimated at around 2.5 to 3% is slightly lower than analysts' earlier expectations of around 5%. So that there is a little bit of a disappointment there, and we do know that the unorganized sector, that is the illegal cigarettes trade, has hampered business. Moving on to your gross margins, they have expanded to around 64% against 62.2%, and that's largely on account of the benign input costs environment that the entire industry has seen, perhaps a few saving graces for the industry. But there certainly is slowdown in rural and urban sectors. Coming down to the perhaps more important FMCG other segment, that has grown 6.6% in terms of revenues, and this was against expectations of around 9 to 10%. Remember, ITC is still growing. It has put in a lot of investments, so this may be a tad disappointing, and that's also the reason why your top line has turned out to be slightly lower. In comparison, it's other other important sectors such as hotels, agri, and paper. They've all done very well for ITC when they have kind of countered partially the weakness, or rather the subdued numbers that we've seen for FMCG. But on the whole, if you consider the numbers, they're largely in line and not too much to speak for, except for mixed moves when it comes to margins for ITC this time.
Okay, Agam, thanks so much for putting that into perspective. That's ITC, and of course, you want to read more about ITC's numbers, do log on to our website. Stories around that would be there. So that is an important monitorable, as also the rest of the earnings season, because we are past the halfway mark of the first quarter earnings season in India, and there are clear signs of a slowdown. In fact, more than half of the Nifty companies that have reported numbers thus far have fallen short of analyst expectations. Darshan Mehta is standing by with the scorecard. Morning, Darshan.
Yeah, good morning, Neeraj. And it's been extremely poor this time around. The numbers that we put out are basically compared to the Bloomberg consensus estimates. But the real truth is that the commentary has been even worse for some of the companies which have reported strong set of numbers. So out of the 32 companies which have reported numbers so far, only 4 of them have managed to beat estimates. 17 of them have actually have come out with numbers which are weak, and obviously this does not consider the commentary that is there. The commentary is weak for most of them. So that's the scorecard. Now, if we take a look at the past trends, just take a look at the number of strong earnings. It's just 4, and the number of weak earnings is 17, which is pretty much the most highest that we've seen in the last 5 quarters. And even if we go back, it will be the weakest in at least the last 2 years, or the time that we've been managing these numbers. So there is clear indication of weakness as far as this earnings season is concerned. So that's the trend. Now, if you look at which were the companies that reported strong set of numbers, you had HDFC, which reported strong set of numbers. Z came out with strong set of numbers, but Z, the big catalyst was, apart from the earnings, was the stake sale that they announced. IOC came out with strong set of numbers. Asian Paints surprised the street with very strong decorative volume growth, but the commentary was rather weak. Apart from it, Reliance, Bajaj Finance, IndusInd, all of them, ICICI came out with inline set of numbers, but you can see the clear trend in terms of the weak set of numbers. The auto numbers are there. Eicher, Maruti, Tata Motors, L&T was there from the infra space. A lot of these banks, HDFC Bank in fact was here, Kotak Bank was here, SBI was here, and a lot of the heavyweights, the TCS was here. So clearly the trend has been on the negative side this time around. Now take a look at what the estimates were. on April 1st, which is when the earnings when the quarter started, the estimate for the Nifty was 121. Somehow analysts haven't revised it downward. It stays May 31st is when the quarter ended, and this is when the fourth quarter earnings officially ended. So it's been in this range only. There haven't been any cuts that have come in as of now. But if we take a look at the estimates for the 32 companies, the estimate was 88.7. The actual number is 84.8. So there is close to a 5 to 6% miss that is there as far as the earnings is concerned for the 32 companies as of now.
And Darshan, I mean, so that's the overall synopsis. Now, sectorally, which are the winners, which are the losers?
So I think a majority of them have lost out. Banking, for one, being extremely weak. IT was rather okay, but the other companies have come out with big set of numbers. Let's start with the agri performance. UPL was a weak set of number. Higher cost hurt the operational performance. The management, in fact, maintained the guidance, but have said that the growth will be back-ended. So the commentary was not all that encouraging. Auto as a pack was extremely weak. Tata Motors, JLR margins hurt. It hurt. The domestic arm was decent, but overall it is valued on JLR, which was weak. The commentary was not the best. Maruti didn't give a guidance this time around because of the short-term uncertainties. Hero did well this time around, but it was the price hike that aided the operational performance. And Aisha was extremely weak. Lower volumes and discounting hurt the margin. So auto as a pack, except for Hero, which was in line, the entire season, the entire quarter has been extremely poor. The other one is L&T from the infrastructure space. Higher financial and cost impacted the numbers, so that was there. So the numbers were also weak, and the guidance, even though maintained, the management said that expect the next few quarters to be a subdued private capex so that is there. So the commentary was not the best, and the counter did manage to correct. Look at the volumes that is there. HUL, the volumes growth was the lowest in the last 7 quarters. Asian Paints was an outperformer. They did extremely strong volumes in the decorative paint segment, but the commentary was somehow a little bit of cautious. ITC cigarette volumes disappointed, so probably may react negatively in trade today. So that's the FMCG space. Oil and gas, yes, IOC did well. Inventory gains and strong refining petchem refining performance did well. Reliance was okay. Refining did well, but petchem managed to struggle. For Jio, we'll speak what happens on the telecom side. As far as the other sectors are concerned, banking, yes, Bajaj Finance, the numbers were in line, but there was a little bit of caution as far as the asset quality was concerned. Yes Bank, the gross slippages doubled. HDFC Bank, the provisioning was much higher in the agri, and HDFC Bank disappointed this time around. Kotak was disappointing. ICICI Bank, even though the numbers were in line, they didn't give any kind of growth guidance. Axis Bank was disappointing this time around. The asset quality did manage to weaken. So financials as a space didn't do well this time around, except for a 1 or 2 there. TCS disappointed this time around. The lowest margins in the past 8 quarters. The big exception was Infosys. They hiked the revenue guidance this time around, but the numbers were in line. Tech Mahindra was weak. Wipro was weak this time around. So IT as a pack also didn't do well in trade. Metals disappointing. JSW was in line, but Vedanta disappointed. Both zinc and aluminum performance disappointed for Vedanta. The other sector was telecom. ARPUs declined for the 7th straight quarter for Jio, and Reliance has been on a downtrend ever since the numbers came out. It's been trading rather weak. Airtel also was rather weak. Bharti Infratel was also weak. So overall, telecom as a pack was weak. Some of the other ancillary sectors, pharma, extremely weak commentary coming in for Dr. Reddy's. Basically, PSAI and their proprietary business did well. Gross margins contracted. That was a big negative, and Dr. Reddy's also managed to correct significantly post the numbers. And finally, Z was a strong number. Robust subscription demand that was there, but the advertising revenues remains weak. But Z is now more of a play on the M&A side and what happens next. So overall, if you look at the earnings itself, very few bright spots that came in, but overall it's been a disappointing quarter so far.
Yep. Thanks a lot for that, Darshan. So on an already weak sentiment, the fact that the quarter is not delivered definitely puts pressure. Well, for the broader markets, the one stock delivered, and that's Deepak Nitrite, reported an optically strong set of numbers. The addition of the phenol business had a lot to do with it, but I say, how does it matter? Because on closer look, while there were many pain points, the overall numbers looked very impressive. Yash Upadhyay is standing by with the fine print for what could arguably be the stock of the day. Morning, Yash.
Morning. So, like you rightly mentioned, it was down to the fact that the company has now started reporting the Deepak Phenolics, which is their phenol business, starting the 4th quarter. So, as a result, result of that, the numbers on a year-on-year basis might not be comparable. But if you look at the headline numbers, we've seen a strong top-line growth coming in at about 1,051 crore rupees, net profit at 132 crores, EBITDA at 254 crores, and margins at 24.2%, upwards of the 20% mark for the very first time for the company. Now, the main reason for this, however, is not the fact that it is their phenol business which started contributing, but the most of the heavy lifting that has been done by the performance products business. Now, keep in mind that it has been a business which had been under pressure for several quarters. In fact, it only managed to see a turnaround in the fourth quarter of last year. If you take a deeper look when it comes to their financials, their performance products business saw almost 3x growth on a year-on-year basis. Their revenue stood at about 226 crore rupees versus 80.5 crores. And a better barometer for that would be to compare it on a quarter-on-quarter basis. And there too, it has seen a strong 79% growth. The EBIT too has jumped to 131 crore rupees versus 48 crores in the previous quarter, and margins stood at 58%. So this goes on to show the kind of potential that even the performance product business has for Deepak Nitrite. The main reason for the strong earnings for the performance products business was largely driven by the strong DASDA prices, which is one of the chemicals that the company uses in the performance products business, which is generally used by the paper and the detergent industries. There the raw material prices have been favorable, and also the demand supply ratio has also improved. Because of that, we've seen this kind of improvement in the performance products business. But coming to the phenol business, we have seen a sequential dip for the company. Now, revenues were down about 4% on a quarter-on-quarter basis to 501 crore rupees versus 522 crores. EBIT was also down 23% to 59 crores, and this was mainly on account of the weakness in the phenol acetone spread. We had mentioned this a few months back that the phenol acetone spread had come off from the peak, and this has got to do with how the crude oil prices do move. They move in tandem or with a slight lag of a 1 quarter with crude prices, as a result of which we saw the phenol and acetone spreads contract, and because of that there has been this underperformance, but it still manages to remain healthy is what we understand from most of the brokerages. But that apart, the other two business, which is the basic chemical as well as the specialty chemical business, there too there has been some amount of weakness. So basic chemical business was down about 1.3%, and the fine and specialty chemical business revenues were down about 5%. So overall, it was the performance products business that did most of the heavy lifting for the company, rather than what was expected from the phenol business. But looking at it, it seems that there is great opportunity on both the sides, and with stable growth, which the management has been forecasting with 15% plus sort of volume for FY20, Deepak Nitrite clearly would be the one stock to watch out for.
Okay, thanks a lot for that, Yash. That's one mid-cap company that came out with arguably a very good set of numbers. Let's see if in a market like this, can it perform or no. On to other important news. Finance Minister Nirmala Sitharaman will chair a meeting with the heads of public and private sector banks today. This will be her first such meet after taking office in the month of June this year. Nikunj Johri tells us what's on the agenda.
Finance Minister Nirmala Sitharaman is going to chair a meeting with heads of all public sector banks and major private sector banks today. The Finance Minister is expected to review the credit growth in various sectors of the economy like MSMEs, automobile, affordable housing, and is also expected to review the liquidity crisis or the liquidity crunch that NBFCs and housing finance companies are facing. There's also going to be a discussion on the future priorities for the banking sector and measures that can be taken to improve India's growth. Over to you.
Well, and the other big monitorable, of course, is Jammu and Kashmir situation. Now, the state remains on the edge with new restrictions on people coming into effect from midnight. Section 144 has been imposed in Srinagar and some other parts of the state, and prominent state leaders have been put under house arrest. The opposition says it is going to raise the issue in Parliament today. Prime Minister Modi will also chair a cabinet meeting before the Parliament convenes. One will have to wait till a government representative briefs the parliamentarians about the rationale. The government sent additional central paramilitary forces to the state last week and called off the Amarnath Yatra, raising the alarm among citizens in the state. Schools and colleges will remain shut till further notice, and mobile internet services have been down across the state. Well, from a sentiment perspective, not necessarily a pure economic perspective, this remains amongst the top 1 tribbles back home in India. That's all that we have on First Word today. But there is lots more lined up for you in Indian Open. We take a status check on the progress of monsoons with Eka Srivastava of IMD. That's coming up. Right next, discuss the first quarter earnings with Praveer Sinha of Tata Power and Venkatesh of MRPL, Hiranand Salani of Astral Poly Technic, and Siddharth Mohanty of LIC Housing Finance.